This is Super Investors and the Art of Worldly Wisdom. I'm Jesse Felder.
Object to the test!
This episode is brought to you by The Felder Report. For every podcast I put out, I also publish a blog post at thefelderreport.com with links, charts, reports, and other resources related to the conversation. So if you haven't done so already, go to thefelderreport.com and see what you've been missing. My guest for this episode is Todd Harrison. Now, Todd is truly one of the good guys on Wall Street. After a career that took him from the Morgan Stanley options trading desk to running a major hedge fund and then starting a financial media business, Todd founded CB1 Capital several years ago. The firm, an investment advisor and manager, was born out of Todd's belief in cannabis as a relatively untapped source of wellness and as an investment opportunity. After a 9-month bear market that's seen stock prices in the sector fall in many cases over 50%, Todd sees what he now calls a generational opportunity and the trade of a lifetime. In this conversation, and in typical Toddo fashion, he candidly shares his work and discusses his thesis behind the trade. So without further ado, please enjoy my conversation with Todd Harrison.
You ever wonder why fund managers can't beat the S&P 500? Because they're sheep. And sheep get slaughtered.
Toddo, welcome back to the show.
How are you, Jesse? It's good to talk with you again.
You know, I'm super glad to have this chance to talk with you because I've been watching the cannabis opportunity very closely. And as much as I would love to do this in person, and I was actually hoping to get back east maybe next summer, you know, this opportunity seems really timely. So I'm glad that we could do this. But before I get into the cannabis thing, you tweeted, you know, for everybody who, you know, is maybe unaware of you, I recommend I think it's been 4 years since we last talked, but we discussed your background and all that kind of stuff back then. And so I recommend people go listen to that episode for, you know, just to understand your background. But you did tweet recently, and I got to ask you about this. Quote, made $28K a year when I started at MS in 1991, watched the Stratton Oakmont kids drive around in Ferraris. Getting a similar vibe now during the everything rally as cannabis pays its dues and grows its roots. This is the beginning of a long journey. So first of all, congrats on 30 years in the business, my friend. It seems like that's a pretty cool anniversary. But I also got to ask you about the Stratton Oakmont thing. I mean, what was that like? You know, just kind of witnessing that firsthand. Did you think like, what are these guys doing that I'm not? Or was there, you know, did you kind of have a sense that you know, Jordan Belfort's and co were kind of up to no good?
Well, I didn't know Jordan. As it turns out, it was we were in the same neighborhood. I grew up in Great Neck on the south side of the tracks, not the north side of Great Neck, which is a completely different vibe. But nonetheless, you know, worked since I'm 13 or so, so I'm no stranger to that. And you know, 21 years old, you know, I'm not going to lie, you see these kids in these Ferraris and you do wonder what's going on over there. And forgive me as I let my puppy out. You know, you do wonder what's going on over there, but I didn't know them directly. I watched them from afar. But it did motivate me, certainly to go down the road. And it was a much longer road at Morgan Stanley, just in terms of paying your dues and learning your lessons and making mistakes and really finding your way through Wall Street in the early 90s, and as derivatives and all of that came to the fore. So it's been a lot of bubbles and busts over the last 31 years now.
Yeah. Well, you know, it was just, it struck me as, you know, something that, you know, it was a pretty good metaphor for what's going on today, right? I mean, if you're in the cannabis space, it's been a challenge over the last 6 months or so to watch these things just get cheaper and cheaper while everything else is just, you know, screaming higher.
Well, it's been 9 months, Jesse. Not that I'm counting, but it's been 9 months. But, right. You know, it is a bit of a metaphor. The everything rally of 2021, and not just stocks, but crypto and trading cards and NFTs and pretty much everything on the planet except for U.S. cannabis. And, you know, why is that? Well, you know, how long have you got? But the reality is, if you look back to the March 20 low and global cannabis, just to take a step back and a little contextualization for those who are new to the space. The way we look at it, it's there's three phases, right? There was the 1.0, which was Canadian cultivation. That was all about capacity and really the idea of smoking a lot of weed, right? Not that it was that simple, but that was the mindset. And they didn't have the distribution, the channels. There was a lot wrong there. But snaps to our Canadian friends for forging the way. 2.0 is the notion of cannabis as an ingredient, right? In CPG, consumer packaged goods. So that is it's a pretty ubiquitous category, but everything from obviously there's the social lubricant side and the form factors therein, whether it's smoking it, eating it, vaping it, bubble baths, tinctures, lotions. There's going to be a lot of different a lot of different form factors, but also as an ingredient across society, and everything from cosmetics and vanity to animal feed to pet supplements. I mean, it's a therapeutic compound. So there's going to be a lot of use cases for it, but that's all getting unpacked, and that's neither here nor there. 3.0, just so it's said, is the idea of cannabis as medicine. FDA pathway, clinical pathway, biotech pathway. We're excited about that, but that with GW Pharmaceuticals off the board now, those companies are back in the farm leagues, just trying to find their way now, which is fine because 2.0 is really exciting. It's about to get unpacked. And to your point is, the last 9 months of pretty much a straight down trend. Why? Okay, well, into that Canadian cultivation 1.0, you had this massive rally, right? And that rally topped out in January of 2018. From January 2018 to February of 2020, the global cannabis index as measured by Bloomberg was down 92%. And I know that because we were managing money through it. It was not fun. It was a definite learning experience. And to be honest, the blessing of that whole process was a few things. One, our advisory business was formed out of it because when the going gets tough, you form your allies and you band together. And we found a new business. And we also found a lot of very good friends and colleagues and associates and partners because, iron sharpens iron. And when you're down 90% from the highs, you really do find out who your friends are and who does things right and who cuts corners and who tells the truth and all that. And so coming out of that, and that was before the pandemic, mind you, and that was, I'll tell you this part because it's relevant today, but that last real push lower into the spring of 2020 was a function of Pershing pulling all of their custodian relationship for cannabis-related stocks. So Pershing basically, structurally that was massive, right? Because every hedge fund, not every hedge fund, but they were by far the biggest platform for cannabis, and they walked away. So it was existential risk. I think the cost of capital, was a 60% print, and there was real concern about the ability of Sorry about that. I love my dogs, but they're not always playing.
No worries.
There was real existential risk to the space, and then the pandemic hit, right? And we've talked about this a lot. I don't think we've talked about it, you and I, but that set in motion what we now call the slow motion perfect storm, which was you had as it came out, it was deemed essential going into the pandemic. And then, of course, the breadth and the depth of the pandemic and the need for tax revenues at the state level, the need for jobs in a post-pandemic world, those all started to manifest and demonstrate how the breadth of the need for those two elements would be. You had the social justice and the Black Lives Matter movement and really illuminating the war on drugs for what it is. And then you had the 5-state sweep in the elections of 2020, right? 2020, in November of 2020. And that was blue and red states. And that's when we really pushed all of our chips in because it was like, this is a state-led story for all the reasons we discussed. And that's a long tail in front of us in terms of these states coming online. And the stocks reacted off of that February or March low of 2020, I should say. These names were up TerraSend was up 1,250%. Green Thumb was up 1,000%. I mean, you're talking 10x moves, right, into February of this year. And then, that was when you had the blue wave come through and Schumer come through, and that was like a short-term blow off top. That was the cyclical bull within the secular bull, that top. And since then, anywhere from 50 to 70% lower in U.S. cannabis for a number of reasons. A lot of them, I would say, call it 50%, which is what the MSOS has retraced. That's the U.S. cannabis ETF that we advise, but it's U.S. cannabis exposure as opposed to MJ, which is Canadian cannabis exposure. But you have after a 10x move in a lot of these names, and MSOS was only introduced in February of last year, so it only caught that last tail, or up 175% from what was it, September 1st to February 10th. Still a pretty good move, so to pull back 50%, rough justice, or for the space to pull back, in a cyclical bull within a cyclical bear, within a secular bull, makes sense. I think as we take a step back and a longer lens, and I think we're right about there. I mean, we're talking now, it's November 4th, 2021. It's a Thursday. MSOS is trading at 25.84. That's the lows of 2021, and I think a great time for us to be having this conversation.
Yeah, and I want to get into MSOS and, kind of just for people who are unfamiliar, introduce them to what MSOs are and what how the ETF tries to take advantage of those. But I want to come back to this advisory business, because to me, it seems like that's one thing, you've really been good at throughout your career, is kind of building connections in the industry that help you just validate your own ideas and things. And so what makes me think of this is you were in Ojai again recently. I think it was 15 years ago or something that I showed up down there for the Minionville event.
That's right. That's right.
Well,
that's right.
I don't I don't do investment conferences or anything typically. So that one for me was kind of a rare thing. But you were in Ojai again. Was this I guess, what did you get out of that experience? What was kind of the purpose of it, and what did you take away from it?
Yeah, that's I forgot you were there. It was 2005, I think. So 16 years ago. It was real full circle. I was looking to replicate, the Minionville community, but in cannabis, especially during, as you know, and for those unfamiliar, Minionville was my former company, or hobby, for 15 years, as you might call it. But it's about educating and informing and building community around things like honesty, trust, and respect. And all you have is your name and your word. And you'd be surprised at how many, people can identify with that and really value that, even still. And you say the air of integrity gets thinner with age, right? So it's like it gets, you find out over the course of time, as more people have the opportunity and time to make choices, that things like integrity are sacrosanct, right? And so you build community around people who are good at what they do, better at who they are, and you have a much higher likelihood of success. And that was the model. That was the model on the people side. On the Ojai side, I was looking to replicate that, and I was introduced a few times to these guys over at Trailblazers, and they had built an incubation, a community around, grassroots and ground up, boots on the ground, more of an incubation model for helping small businesses emerge through cannabis. And they came from, a background in having, a summit part of the summit series and high-end events. So I was intrigued, and I got to know them, and they had the same ethos in terms of the community. So I said, okay, I get that part. And as I got to know the business model of what they were doing, I said, we used to do this. As a matter of fact, we did this 16 years ago in Ojai. When I found out that they were doing it at Ojai, I said, wow, isn't that interesting, if you believe in signs? So I said, listen, if we can go ahead and take some of the model that I employed the last time here, the Wall Street lens, and we build categories, right? And the categories that I suggested and that we ultimately did were, we have the banks, we have the operators, we have the investors, and primarily those three, and find within those categories best in breed. Again, people good at what they do, better who they are. And when you get there, you lift up the silos and you let the entourage effect, take its, do what it does, right? You let people congregate. It's not about sitting in a room all day. It's about events. I mean, me and Jamie Mendola were working out next to each other. He looked, just like Ben Affleck. I was like, it was a really odd out of body experience, but those are the ties that bind, right? We smile now, we talk about it, we've built memories. That's what creates relationships. Relationships tend to facilitate business. And so we had a great group. I think we had something like 20 sponsors. We had BTIG and Jeffries and Ladenburg and Seaport and Roth and Needham, all these banks there. We had 8 U.S. banks, which tells you something a little bit about what their intentions are in the space to go out there, right? And I said to those guys, listen, you have a sales trader, you have a banker, and you have an analyst. And if you guys can't, combine to really generate some real ROI, then with the crowds that's there, then somebody's not doing their job. And sure enough, they all came back with 25 action items on relationships. So they were happy. And then the investors, they want to talk to the analysts, they want to talk to the operators. So they were happy. The operators want to talk to the analysts, want to learn about the banking relationships in the U.S. and how that's going to look on the other side of federal legislation. So there was that. So the idea is, you look at what defines success. As I said to these partners when they got there, I said, well, how would you define success when you leave here? And they said, this is what I want. This is who I want to meet. And it's just that easy. So that was the idea. It's very similar to what we did 16 years ago. and kudos to the Trailblazers team for really, creating a superb event that wasn't about sitting in a room listening to each other talk, but about doing things together and a congregation to congregation model of experiential benefit.
I mean, it's just really cool. I think that, this can seem like, the world of finance, like a real, competitive, space. And you've always done such a good job about making it more cooperative. And I've always appreciated that, for one. But to come back to kind of where we are in the, I guess, cannabis as a business, in the longer term trend, it seems to me there's 3 major dynamics going on that are affecting prices. First, people have been waking up to the idea, that cannabis has important uses in terms of wellness, not just, in recreation, but even the recreation opportunity is a big one. But second, then the business end is being figured out and systematized. And then third, legalization is moving forward, which also affects availability to investors and these types of things. You kind of touched on that too. Yep. But all these things seem to affect prices in their own way and across different time frames. And I think just kind of maybe you could speak to, those trends and investors kind of waking up to cannabis as, wellness in addition to recreation. And then also the business end of it. I think, to me too, that's kind of the one of the more interesting sides of it, is figuring out how the business works in a legal framework is something that's really developed since the last time we talked.
Sure. And since the last time we talked, think about all the states that have come online now, and especially in the last year alone, all the states. And in the next year, I'm hearing up to 6 states next year. So our thesis has always been about the state-led story. The 10th Amendment, I almost said the 10th commandment. The 10th Amendment, the states as laboratories of democracy. This is very much in play here. The reason cannabis is so U.S. cannabis, and I have to differentiate because, there is Canadian cannabis that's listed on U.S. exchanges, and then there is the U.S. cannabis companies that are relegated to the Canadian Stock Exchange and the pink sheets because of their federal treatment by the government. That's created a world where mostly retail, I'd say 98% retail participation, very emotional audience, very emotional stockholders, and they typically, not as strong a hands as some of the institutional types that you want to have on your cap table, and that we will have on our cap table over time. And that's been really the drivers, that perception of federal movement, and that's why these things ripped into February of this year, because everyone thought Schumer was going to move this through and we get uplisting to U.S. stock exchanges and access to institutional capital and all of the things that are responsible for why the leading cannabis companies in the U.S. or the FANG cannabis companies in the U.S. are trading 8-9 times next year's earnings, right? For hypergrowth, outlier, like you're getting growth at value, hypergrowth at value. And the reason is people are uncertain about what the federal landscape is going to look like. People are concerned about that the growth is going to slow, which it will over time from a parabolic pace. They're worried about the illicit market. They're worried really about that a red sweep now will portend 4 more years on the pink sheets, right? So, and then as you alluded to earlier, I think in particular, as the only sector that's down this year, the tax loss harvesting is just absolutely brutal. So you add into that mix that 2 days ago, JP Morgan came out and said that they were going to no longer custody cannabis-related securities, following Bank of America, Merrill Lynch, following CS First Boston. This is nothing new. But what was interesting to me is that, to me, this was a bit of a mirror image to Pershing. We talked earlier about Pershing. When they did the same exact thing that JP Morgan did, they were responsible for a large part of the holders of U.S. cannabis. And it got no media attention, right? So structurally massive, minimal media attention. JP Morgan, minimal structural impact, right? I don't a couple $100 million maybe in the grand scheme of things. A lot of that was, as we believe, it was taken care of in October, is one of the reasons that the stocks have been sort of doing what they've been doing, but not a huge structural impact in and of itself. Huge media exposure. So you copy, you look at the sentiment, you look at the technical charts breaking, you look at tax loss selling, you look at people thinking that this is dead at the federal level or even tied, in whole to the federal level. And you end up with, we have stocks like Verano, which we advise, but we have a big position that we built a while back. Verano is trading at 5 or 6 times next year's earning. This is U.S. cannabis royalty, as far as I'm concerned. This is best in breed. It should not be here. This is one of the great mispriced pieces of merchandise I've ever seen. And as I'm sitting here, and again, it's November 4th, 1:22 p.m. The MSOS is 25.87. I'm sitting here and I just wrote a tweet that I said, I think the generational opportunity is about to meet the trade of a lifetime. And I say that because of the sentiment. I say that because of the setup. Everybody had sold their shares already, thinking that this is a dead story. And I think that we're going to get a legislative 1-2 punch in the next month, if not the next week, that could really change perception, that could really shake up, people who have, think that they can buy these things back in a month when their wash cereal goes away. So I think the setup's there, but I've been wrong before, Jesse, you know that. But I think long term, no matter what happens in the next week or the next month, this is, to me, a generational opportunity and a once in a lifetime chance to get into a sector before institutions are able to onboard. And that, to me, I don't care if it's in a week, a month, or a year, to be honest. The longer it takes, the more I can buy, and the more money I think we'll ultimately make.
Well, I mean, that's quite a statement to make, but, coming from you, you're one of the people I respect most in this business. And so when somebody like you, comes out with a statement like that, it certainly gets my attention. I want to kind of come back to, the prospect of federal legalization. I think you kind of mentioned that you see some things on the horizon that, potentially in the short term, could be positive. Sorry,
you're right there, buddy. I'm not going to give you mouth to mouth, not because there's a pandemic, but because we're 3,000 miles away.
Right.
But I would, if you needed it, I would be there for you.
I appreciate it. So yeah, in terms of the the prospect of federal legalization, what do you see on the horizon? Because that seems to me like that's the big bogey that's out there that, once that happens, by then, prices will already be discounting that well in advance.
And that's when I ask you, when is this going to post? Because what I think is going to happen, I think it's going to happen in a relatively short order. So I'm either going to sound really smart or really stupid by the time people listen to this. I can tell you what we're hearing. And that's only as good as, the antenna, and it's only as good as the frequency that's coming in. But what we're hearing is that there's a political calculus in play where the GOP is trying to take the issue from the Democrats. As you know, Chuck Schumer has a big bill that he has been shopping around and talking about for since he came into office. So it's been all year, and I certainly applaud the senator for trying to affect social justice reform as a centerpiece of legislation. If there was a perfect world, this would be, led by social justice, and anything about banking would be an addendum to that. But it's not. In this world, the only thing that has bipartisan support so far is safe banking. And the Democrats have positioned themselves that this is a win for big business and a loss for the small operator and the social justice applicants. I think the light bulb that went off over Washington this summer was that social justice and small business owners are disproportionately impacted by the banking regulations. That the large operators have, by and large, found solutions and have the scale to absorb, these types of incremental costs on top of all the other costs, like 280E and not being able to take expenses and not being able to use credit cards, not being able to use a commercial bank. I mean, all of this, it's like 1971. But this is the world we live in. And safe banking would begin to open that up. Now, there's a safe banking bill that's attached to the NDAA, which is the National Defense Authorization Act, which is must-pass legislation. Congressman Perlmutter in the House attached it to the NDAA. And at the time, the GOP went out of their way to support it. And I remember writing on Twitter and thinking to myself, isn't that interesting that they're now embracing banking? But we know that because the American Banking Association wants cannabis to be safely banked because that's their business, right? I mean, follow the money. But the GOP in the House supported it. So I remember thinking to myself, this is interesting, and everybody still was thinking there's no shot this gets through. And even if it does, the Safe Banking Act, as it is amended to the NDAA, does not include capital market provisions. It's a bare bone boilerplate Safe Banking Act. And there's people who will say, well, that does nothing for capital markets. And they're wrong, because what it does is it automatically updates FinCEN and AML guidance, which would presumably move a lot of the blocks to uplisting and a lot of the blocks to institutional money. It's a second derivative win, but make no mistake, it would be a massive, massive win. So now it goes over to the Senate, and that's where it's sitting. And this is the second latest that the Senate has ever taken to take up the NDAA. And you ask yourself, why? We think we might know one of the reasons why, other than the fact that they are, their agenda is so packed that it's like trying to do a lot. I'll leave the analogies aside. They have a full plate, and a couple days ago, right? They did not have a good election day. The pressure's on for them to do something. And now I think the JP Morgan news actually is added pressure to do something, because that was a very high profile thing and there's a lot of unhappy people. So it goes over now to the Senate. And what we're hearing is that the Senate GOP and ranking members of the Senate Armed Services Committee have all flipped positive for SAFE. And I'm told, obviously none of this is confirmed, that there's 18 Republican senators voting for SAFE or in favor of SAFE. Now, Schumer is the Senate Majority Leader. He could squash it, presumably. But if it goes to conference and they defer to the House version, and that's the version that comes through, it only needs 60 votes. That's my understanding. And they have the 60 votes. So you have safe banking potentially before year end. And I don't think people are really anticipating that. But if that wasn't enough, and I wrote this tweet about 10 minutes ago, I said, this is the GOP calculus. If the thunder don't get you, then the lightning will. We're hearing that there is a bill that's about to be announced or could be announced, that may be announced next week, 2 weeks, 3 weeks, sometime in the future, from a South Carolina congresswoman. And it is evidently a very well-written bill, and it already has bipartisan support. And if they release that draft in the next week or so, or 2 or 3, or whatever it is, as cover into the NDAA, I think the trap is set. And with everybody having already sold their cannabis because of the tax losses, and this is not going to be a great quarter because on the one, we're coming out of a period where you have normalization after that post-COVID, pantry stuffing where everybody bought cannabis, into the pandemic. So you have those compares. And so it's going to not look as good against those compares. And you have had on the other side some delays on the rollout. New Jersey, it looks like Q4, Q1, maybe Q2 for rec, and in New York, Q4, Q1 of the following year. But these are massive metropolises, right? I mean, massive metropolises. So, like, even if nothing happens with the legislation, you're getting paid to own these. The longer it takes for the federal legislation to slide, the more of a moat the existing operators are going to have to build, and the more valuable their enterprises are. If I'm wrong on this, Jesse, like I said, it wouldn't be the first time, but I have never in my 31 years had more conviction on both an investment and a trade than I do at right now, 131 on November 4th. Doesn't mean that it's going to be right. Doesn't mean that, as you know, we've known each other a long time. I'm typically early. I first started tweeting about cannabis in 2010 or 2012. I'm sorry. So, timing is hard, but I think it's setting up.
And, I absolutely, appreciate that. I'm going to try and publish this today. I was going to wait until next week, but I think, because of the timeliness factor, I'm going to get it out today. But I want to understand a little bit more about the business model itself and maybe help people understand what the MSOs are. Maybe from the standpoint of, well, I'll just put it this way. I think I was slow to kind of wake up to the idea of cannabis because living here in Oregon, it seems like it hasn't been done as well as it's been done in other states. There's, illegal pot grows all over the state. They've had to bring in the National Guard to kind of deal with a lot of this stuff. And, I've just heard that Oregon is the prime example of how not to legalize cannabis. So maybe from the standpoint of, how states are doing it right versus how they're doing it wrong, maybe help people understand it from a business model standpoint.
Sure. I mean, every state is different, which is the patchwork of, necessity is the mother of invention. Is that it? Is that how it's said? I think so. So think about in a federally illegal, this is Schedule 1. This is heroin. This is, but in the eyes of the U.S. government, and we could talk about how they weaponize this plant to stop immigration at the Texas-El Paso border, or how they've used it to disproportionately impact people of color through, and weaponize this thing. But we don't have that much time. But it should be said, it's a black stain on the soul of this country, to be honest with you. And all of that is going to be part of that wall crumbling down. But because of the federal treatment, you've had states that have had to enact their own legislation. 10th Amendment, the states as laboratories of democracy, in California, Colorado, and this has been going on for a while as medical states, and then they move to recreational or adult use over time. Every state is different. Some states, like Oregon, like California, they are not limited license states. So you can grow. There's as many licenses as you want to give out. You can give out. It offers. I'm sorry, my dog is going to. Of course, it's Jax. Oh gosh. Sorry, my daughter is off today, and she's got 10 friends here. So
no problem. We were talking about limited licenses versus unlimited in states like Oregon.
So the economics in states without limited licenses is much more difficult than the economics in states with limited licenses. And to be sure, these are artificial impediments, but meaning that these moats aren't going to last forever. But at the same time, you have a situation where the longer that they stay this way, the better that it is, and you're having the opportunity, and you have a moat around your ability to grow, process, and sell cannabis. And our sense is that states are going to continue to control who can grow, process, and sell cannabis. Over time, there's going to be interstate commerce. Over time, there's going to be an FDA. All of this, but there's no broad-based criminal justice reform going back to one of the elements behind this with cannabis on the Controlled Substances Act. It's not like you could say it's Schedule 2, and instead of 20 years in jail, you'll do 10 years in jail. It's not tenable. It doesn't make sense, right? The only thing that makes sense is to take it off the Controlled Substances Act. You circle it like cigarettes or alcohol, which is an irony because it's actually better for you than both of that. And that's the way I think that will go. But there's a lot left to figure out, and the market doesn't like uncertainty, and certainly the market doesn't like cannabis right now. As I'm sitting here, and people are pinging me that Curaleaf just broke the IPO price. I don't know. I think my biggest concern right now, Jesse, if I could be completely lucid, is that I'm not that concerned. Like my biggest concern is that I'm sitting here adding upside calls to the MSOS and just waiting for the track to sprint. Maybe I'm wrong, but this is the textbook second bite at the apple. Unless there is something out there that I don't know, I don't think it's going to be bad fundamentals. I wouldn't mind some sloppy numbers and everyone to get a little bit bearish one more time. And then you see some legislation come out that makes people realize that they better get involved. But I can tell you this, the buyers are higher. I've spoken to a number of different funds in the street, and I think there's a lot more money coming in. We saw Eminence Capital announce, last week, 2 weeks ago, Ricky Sandler, that they moved a bunch of money into the space. Jason Wild, is probably one of the best investors I know, on top of being a pretty damn good chairman at Harrison. These are smart people who see the long-term opportunity. I don't want to name names, but people who I really respect are telling me that not only are they pushing a lot more money in, but there's a wall of money that's coming behind. And I don't even think it needs to be the institutions, because to your point, once the hedge funds can sniff out that this is going to happen, they're going to front run the institutions. And they're going to move into the space quickly, and it's going to re-rate quickly. Like if I'm looking at something like a Verano, and Verano is trading at a 50% discount to the average multiple for its tier 1 MSOs, and the average tier 1 MSO is trading at an 80% discount to the S&P growth multiple. I do the math and I'm like, wow, Verano's worth $100. I'll just keep buying it at 10. Right? That's how I look at things. And again, we advise them, but it's not even about that. It's about the math. It's about the execution. It's about the jockeys, right? It's about you're betting on the jockeys, not the horse in this stage of the cycle. And it's looking for the green thumbs. It's looking for the Terracens. It's looking for the Veranos and knowing your way around. The first move off of this is going to be a rising tide that lifts all boats. I think the second move from there is going to be about alpha and about, good stewards of capital and the right jockeys on the horses. But there's an oligopoly of U.S. cannabis names right now. And when the gates open and the alcohol companies can buy and the tobacco companies can buy and Fidelity and Wellington and Putnam and all of the institutions are able to buy, it's going to be a mismatch on supply versus demand. And I know that sounds really silly to be saying it as I'm sitting here and these things are just awash in red. Everyone's freaking. I can't believe Cura just broke IPO. And I'm sitting here feeding my dog the remnants of my flat crust pizza and just buying more calls. And that's, I'm not being glib. I'm just like, this is why we work, is to get to moments like this. And I don't know if it's a moment today, next week, like I said, but it's close. I feel it in my bones.
Yeah. Well, I want to dig even deeper into that opportunity, but I also want to understand the MSOs a little bit better. I mean, we talked about states with limited licenses, unlimited licenses. When I was looking at cannabis as a business a few years ago, when it was legalized here in Oregon, I just saw all those licenses go out and so many people started growing that, profits just tumbled. And I think there was a lot of product and stuff that came on the market at a loss, because of it was just done poorly. But, I started looking at the MSOs, a few months ago, and these things are highly profitable. I mean, the business model is totally different than what I assumed it was from just looking at companies here in Oregon, private companies. So maybe talk a little bit about what are the multi-state operators and what makes them just cash generating machines?
Well, again, because of the regulatory environment, you've got a lot of things that Jaxie, stop it. I apologize, Jesse.
No worries.
Because of the federal regulations, there's a lot of impediments, artificial impediments. I talked about the tax treatment, talked about the banking, talked about the exchanges, talked about the investors. And despite all of that, this goes back to iron sharpens iron. Despite all of that, what we call the U.S. cannabis FANG, these names are still generating free cash flow. They're profitable, and they have set up a framework of operations across most of them across the limited license states, some of them across both limited license and unlicensed states. Everybody has a different take on a similar model, right? Whereas maybe you have some that are really geared to wholesale, the wholesale market. You have others that are more geared to the premium flower. But I think by and large, what you're talking about is the evolution of a new category of CPG that I would probably say is akin to crypto in 2015 or 16, right? As people start to understand, not only the opportunity economically, but the perceptional offsides that this is vice, that this isn't wellness, right? We think that this is a wellness play. We think, yes, people are going to use this recreationally and drink it instead of beer and take it for sleep instead of Xanax or any of the other medications. But over time, this is going to be a ubiquitous and economic driver. It's going to be a category, an asset class that really emerges as a growth hedge at a time where everything else that has any growth attached to it is at a ridiculous multiple or no multiple in the case of a lot of the digital stuff. So every company is different within the sector. Every company is different, but there are tiers, right? You have your tier ones, you have your tier twos, your tier threes, and that's at MSOS, which is the ETF that we help advise. The way that is structured is, we'll call it barbelled, where you have half of it is FANG, and then half of it's the second and third tier guys that may have a little bit more trouble surviving and thriving in the absence of any federal movement and the continuation of these artificial impediments. But if you get something like a Safe Banking Act that comes through, the beta on the back end of that totem pole is going to, I think, be a lot bigger than the beta on some of the front end FANG names.
So let me ask you about the MSOS ETF. You advise the ETF. So you might be, I don't know, limited in how much you can talk about, but it invests in these multi-state operators, but it looks like it doesn't own the equities directly. How are they actually implementing the trade?
Right. So because of the federal regulation, you can't list on the New York Stock Exchange or NASDAQ, or even the Toronto Stock Exchange for that matter, if you're touching the plant in the U.S., right? If you're afoul of federal regulations, you can't touch the plant. I'm sorry, you can't list on a major exchange, which is why a lot of institutions won't touch it, which is why a lot of the CPG won't touch it, because they don't want to be brought, in the case of CPG, they don't want to have 280E, which is the tax code applied against their whole business. And in the case of the investors, they're not going to risk their entire franchise to invest in something that's federally illegal, if it's even a fraction of what their franchise value is. We've spoken to a lot of these funds, and we've spoken to a lot of the CPG, and they're all coming. So it's a matter of when, not if. But from here until there, these companies will continue to build their business until they have a better line of sight on uplisting.
So the ETF uses some type of derivative in order to.
Yes. I'm sorry. So it's a forward return swap. So they don't own it directly because of the federal treatment. And this is blessed by FINRA. It's blessed by the SEC. So this is kosher through the eyes of both of those regulatory agencies, and they're buying the rights to the underlying assets at a particular price of where you buy the MSOS. So it's you're not actually owning the underlying assets, but you're owning the upside and downside exposure.
Well, I mean, it's just fascinating to me. One of the first, it might have been the very first interview that I did when I started my podcast 4 or 5 years ago, was with Steve Bregman at Horizon Kinetics. And we talked about the massive impact, obviously, that passive and indexing has on the markets today. And his firm, for the past, I don't know, however long, 5-10 years, has been has decided that true value opportunities are going to be things found in things that are outside the purview of the indexes, because the indexes float. Money goes into the index buys everything, and things that are underexposed to indexes are going to be where there's opportunity. I mean, cannabis is not only left out of the indexes; it's left out of the majority of U.S. investors can't buy them. So there's this structural impediment that almost necessitates them being extremely cheap today. While indexes are doing really, really well.
It's got all the characteristics of a stock that would have done well or a sector that would have done well in 2021, right? If you had, you got all these Robinhood traders who want to stick it to the man because they stopped trading GameStop. Imagine if they actually wrap their heads around the fact of what they've done to U.S. cannabis, not only as a country, to the people, about burying the data for years, all of the lost opportunities and the sunk costs and the treatment of people and all of it, and then the custody stuff, the JP Morgan. It's just like, this is, once Robinhood figures out that the MSOS is the ultimate vehicle to stick it to the man, that'll be a good, I don't know if they'll still be around. I don't know if we'll still be around, but none of that is in play, to your point. We're at the, and there's a lot of pernicious algos. I know, you don't hate the player, hate the game, but we watch them. I mean, and you have all the retail holders of these things, and then you have these algos come in and they're so illiquid trading on these, on the pink sheets and on the Canadian Stock Exchange, that they just beat the crap out of these things on the close. And everyone's like, oh, something must be wrong. I must be missing something. Business is really bad. What am I missing? And this is, gamesmanship on the CSC, which is just repugnant and just completely, out of my control. But it is what it is, right? Like, so what do? I sit here and I say, I can hate the player, I can hate the game, or I could just control what I can control and navigate the rest. And what do I mean by that? Well, the prices are going to do what the price is going to do. So we're going to work on trying to, find money, as much money as possible to invest at these levels, identify as many relationships to build at these levels, and really use price to our advantage. And I can tell you this, like, people are very angry out there. I've actually had to turn my DMs off. I get, I'm getting cursed out, and you know what? That's probably a good sign too.
Absolutely. I mean, that's one of the reasons why I'm still on Twitter, is because I find, the sentiment signals there are as good as anything I've found. But, I'm really glad that I think you brought up GameStop, because to me, I was looking at GameStop. I was buying Bed Bath & Beyond, a year and a half ago, because 100% of the float was sold short, and it was hard for me to understand. Same thing with GameStop, more than 100% of the float sold short. And you think, how does any hedge fund in their right mind ever get themselves in that sort of position, with that sort of a potential squeeze there? And I think, Michael Burry was buying GameStop at the time because he saw that same thing. I think he's interested in this cannabis trade today too, not necessarily for the same reasons, but there's that same dynamic there that I think that, like you mentioned, the active money that's still out there is algorithm driven. And it seems like momentum is maybe one of the only factors that they use. And so something that's falling in price, they just build up a bigger and bigger short position against it. That's the only way I could kind of explain what was happening at GameStop towards the end there before it reversed higher. If that's going on in these illiquid names, it does set up a pretty explosive short squeeze. But I want,
Jesse, just again, from a positioning standpoint, because you look for things. And I mean, to be fair, I've been bullish in cannabis all year. I've been bullish all last year, bullish the year before that, bullish the year before that. 2012, I wrote a tweet. I like to float it around because it reminds me how old I am. It says, if the Great Depression, I can't believe I just messed this up, but something along the lines of, the Great Depression ended the first prohibition, the next Great Depression will end the modern prohibition of cannabis. I wrote that in 2012. Yeah. So here we are 9 years later, 10 years later, and we're still waiting on it. And I'll tell you the other thing, the reason that we have stayed primarily liquid securities, public securities, despite all the fuckery, despite all the banks and all of the, why does JP Morgan pick now to send out a memo when they don't really have that big of a business? You wonder. but you sort of know. And the reality is, like, this is all going to change, and it's going to probably change sooner than a lot of people think, because most people have given up on the trade. They have PTSD, and I say that Pershing, traumatic stress disorder. They think JP Morgan is that. I don't think JP Morgan is that. But what I don't know is when the tax loss selling abates. I do think that we're very close, and I think that when they turn, the buyers will be higher.
Well, one of the most, I think, valuable things that I've learned from you is a framework for viewing whatever trade or investment as you're looking at, is the concept of the four legs of the trading table: fundamentals, sentiment, technicals, macro. Maybe you could just, I know you've kind of touched on these things just, here and there already, but maybe framing the investment from those four legs would be helpful.
Well, I think fundamentals that's the thesis that we're leaning against. The fundamentals are terrific. And even if it's a value trap, even if they miss earnings by 20% and the PE goes up, like, you're still just got so much cushion on your, on that business, and such a moat right now. And when, you're sort of stopped out against, when you lose your moat, you're going to gain access to capital, gain access to listing, gain access to all sorts of things that will level the playing field. Yes, maybe your margins will go from 50% to 30%, but the addressable market explodes, and your efficiencies in your business explode. So, that's really more structural, I would say, like sort of that, we look at the fundamentals as our baseline. We look at really the federal movement or the structural as that upside call option to the thesis. Like, we think these things re-rate call it 5x by the time they uplist, probably from these levels more, right? And so that to us is, that's the call option on the space. When they figure it out, and I personally don't think they're going to have a comprehensive solution unless this bill that's being murmured about out of South Carolina gets bipartisan support, and the Democrats realize that they have to take the win. That's a scenario if that's feasible. But absent that, it's likely going to be an incremental slog over time. And that's probably, as much as people don't want to hear this, the best case scenario for the companies that are continuing to widen their lead and build scale and consolidate operations and really feed the beast, right? Because at the end of the day, when this thing does go, one thing that we can all agree on is they're not going to want to upset the apple cart. They're not going to want to stop the revenues. The states are going to want the revenues. The representatives from those states are going to want to protect those revenues and those jobs, right? So it gets political, but in a good way. Finally, when that switch finally flips, but that's all structural, right? Fundamentals. I can send throw you a grid of the fundamentals and the multiples. It's eye-watering. Growth and value fundamentals. Technicals, ugly, really oversold. The technicals will confirm the fundamentals at a later date. I think fundamentals lead. It's the old adage: in the short term, the market's a voting machine. That's the technicals. In the long term, the market's a weighing machine. Those are the fundamentals. But right now, really oversold. And every cyclical bull market starts with a short covering rally. So that's what we think is going to happen. And then the last one is psychology, and fundamentals, technical, structural, psychology. Psychology is, people are texting me or pinging me as we're sitting here. Wow, you sure get a lot of hate. And I'm like, I know. I don't even look at Twitter anymore. Because I'm just focused right now on the task at hand. And I think by the end of the year, people are going to have a lot different perception on cannabis and a lot different perception on the people who are bullish on cannabis versus the people who said, hey, I told you so, stay out of this sector. It's garbage. This is a 2022, 2023 story. Everybody has a different time horizon and risk profile. I don't disparage anybody. As you know, I've been doing it for over 20 years online. I talk about what I'm doing, how I'm doing it, why I'm doing it. And, sometimes right, sometimes wrong, always honest. So if somebody's got a problem, I'm down 50% since February, that's on your timing, not mine. But I empathize. I've been there. I am there. In a lot of ways this year, although, more giving back what was a great year, than the alternative. But nonetheless, it's a long game. We're looking out and we're looking forward and we're very excited. And if there's, if that's too Pollyanna, then I'll own it. But I think it's going to work out.
Well, I'm actually really glad you brought that up, because I think one thing people don't, especially in today's market, whether you're talking about crypto or these meme stocks, is people don't have a good understanding of how to manage risk. So, like you said, you've had a great year. It's gone, maybe down to a good year. What have you done? Obviously, you've had to manage risk through these last 9 months, and so how have you accomplished that?
No, we had. Listen, you know me, Jax, go away. If I was going to say to you a great year to a good year, I'd be lying. It was a great year turned into a okay year, right? But the year's not over, right? I think it's going to be a great year by the time the year's over. And I'm a man on an island with that view, with the exception of one or two people that I speak with. That's not true. There's other people, but my point is, it's not over yet. What we've tried to do, I'll be honest, we sold a little bit, not enough in February. I did want to lighten up a little bit into the summer, but unless you were planning your summer vacation in February, you didn't get a chance. So I didn't sell as much as I could have or wanted to, but I try not to look back, sometimes better than others. The fundamentals were such that, we're happy to ride this out. I think this is still the easy trade. And maybe I'm being glib. Maybe I'm fooling myself. Maybe I'm ruining my reputation. But I still think this is the easy trade. When these things get on the big board, when they get up to NASDAQ and the New York Stock Exchange, then things get harder for the industry. This goes from a cottage industry to an industrial complex. All these clubby, smiley, handshakey, friendly, a lot of that goes away, right? This becomes a Wall Street industrial complex, and we lose a lot of it. And that's just the way it's going to be. It's like when a founder, turns it over to a suit in the corner office. It's just the way things happen. I just don't think anybody is looking at cannabis as an asset class yet. And I think that's about to change in a massive way.
Well, this is totally changing gears. I've taken up a ton of your time already, but I got to ask you, and this is more of a personal question, but out of everybody I've known in the business, you seem to have a better grasp on how to balance, your values and priorities with your, with what you got going on with work. Friends, family, community, they've always been a big deal in your life. How have you managed to maintain this perspective through your career?
Well, Jax, listen, I'll tell you the honest truth, Jesse. I'm a lot more pleasant on the page than in person. And I'm a lot different now than I used to be. 9/11 really did change me, not to kind of use that as an excuse, because I think it changed me in a good way a lot of the times. I'm very lucky to be surrounded by people who see through my difficult attributes and support me and love me still. And, I think that's a testament to, the ability to find people who, are good people. Because I think I'm a good person. At the end of the day, I try to do the right thing. I don't always do it, but as I tell my wife, make a lot of mistakes, but I rarely make the same mistake twice. And I think just the ability to appreciate that. And I think a lot of it, to be honest, is having gone through really hard times. I will tell you, having suffered from depression, PTSD, and still at times, it makes you really realize the little things that I took for granted. And I don't think I was like this, to be honest, when I was on Wall Street making, Jaxie, please stop, honey. When I was on Wall Street making millions of dollars, I took a lot of things for granted. I was a bit of an asshole, and maybe I didn't treat people the way that I always, would aspire to treat people. But as you get older, you change in certain ways, and hopefully for the better. Some ways in the worse. My hair, my weight, maybe, but hopefully in the better, because over time, you don't remember really a lot about this life, but you remember how people make you feel, and you remember, the people you love. And, at the end of the day, like, we're not going to be here much longer. So you try to just hold on to the things that matter and try to learn as you go. And that's probably as honest as I can be.
Well, it's something that I've always appreciated, and I'm really grateful to you, Todd, for taking the time to do this today. This really seems like a timely thing. Like I said, I'm going to get this podcast published today, but I really appreciate you sharing your expertise with my audience and taking the time to do this.
I appreciate it. And if I seemed a bit all over the place, aside from my dog attacking me as we speak, it is during the trading day. I'm ADD as a matter of course, so I'm normally like a moth in a light bulb factory. But on a day like today, you make it all work. Well, thank you, my friend. And by the way, I do want next time we do Ojai, I hope to see you there.
Yeah, Ojai is a place I spent a ton of time, and so I love going back there. But I do also have to mention before we're done. Yeah, I know you're not spending as much time on Twitter, but anytime anybody expresses an interest to me in investing in cannabis, I always point them to your Twitter page at Todd_Harrison. Go follow Todd, and you do a terrific job of keeping everybody updated on the space. So thanks for that too.
I appreciate you, and listen, have a good rest of the year, good holiday with you and your family, and I look forward to doing this in what will be 2025.
Yeah. Well, hopefully we'll do it before then. So thanks a lot, and we'll do it again. We'll do it again sometime soon. Thanks, Todd.
Terrific. Thanks, Jess.
Sounds on it for the 142!
And that does it for another episode of Super Investors and the Art of Worldly Wisdom. As always, you can find notes and links related to this episode at thefelderreport.com. Thank you for listening, and until next time, buy low, sell high.
Man looks in the abyss. There's nothing staring back at him. At that moment, man finds his character. And that is what keeps him out of the abyss.